Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Hey everybody, welcome to today's edition of the Daily Market Commentary. It's Friday. Hope everybody had a great trading day yesterday as we had a pretty big down day in the markets. For those of you new to the channel, click that subscribe button down below and hit the notification bell so that you get the updates as they happen. So typically we don't add lines to the charts unless I do it inside of a daily market commentary so that you can see how trades develop over time. Although yesterday we did not do a daily market commentary because I did the live trading room instead at TradersArmy.com. So some of the lines that you will see are left over from there. But I want to go over some of the trades from there because a number of you were in the room yesterday. So yesterday we looked at the equity markets. We looked at, there was some supply up above us. There was some overhead resistance, and we said that there is a chance for a reversal in a couple of markets. So the level that we had looked at yesterday was formed at a really poor time of the day. It wasn't a great time of the day for an area to be formed, and if I found it on a 15-minute chart, it's easier to see. It was this little level right here, and look how price came back up into there and made a huge move down. So anybody who wanted to play that move from that live trading room caught a really, really nice run. We were doing that live trading room when price was sitting right about here, and I wasn't sure we were going to make it up to there, but we did indeed make it up to there. Now, there's a chance you didn't get in because we also had the same level identified in the NASDAQ, as well as that same level identified, same time of the day it was formed, in the Russell. So it did not quite get there in the NASDAQ or in the Russell, but it did in the S&P. And so we got a really nice move out of it on the S&P. Go back to it from this area. Now it came smoking all the way down to where I thought our target would be, but I definitely felt more like we have a potential for a reversal at this point. I thought this was a pretty good little area here. Let me go back to the hourly chart. A little bit of a basing before a nice move up. My problem with this basing was the time of day it was formed, and which is exactly why we kind of hit it and went down through it just a bit, although that did serve as the catalyst for price to rally higher. So that wound up being a really nice trade for anybody that was able to pop in and take it. But now I need to remove the lines on these areas since this is no longer going to be valid levels. So what are we looking for today? Well, no question on an hourly chart. I've got lower swing lows and lower swing highs. On a 4-hour chart, I have a lower swing low and a lower swing high. So, my trend direction by all the technical definition has changed to a downward trend. And so since my trend direction has changed to a downward trend, we could get a little reversal right up into here. And we're playing up into that level now. This would be the area that I would look at for a reversal today. Now, understand we have some news coming out around non-farm payroll that is going to be a very interesting piece of news, and I wouldn't trade the reversal before that announcement comes out because you may just get a breakout through here and then it reverses right back down. So there are a couple of different opportunities in there of the best way to play it, but this. Yesterday this was that strong move down that we indicated catching the kind of the top of that. So this isn't the origin of a move down, although I'm sure there was some more volume added to it. So we could also see a little reversal up here. So keep this area right here in mind. I'm gonna look at that one as we head back into that level. Same thing in the NASDAQ. Let me pull this over here to the NASDAQ. So in the NASDAQ, we're also coming back up to this area. And remember, you're not necessarily going to trade it in the S&P and the NASDAQ. You got to pick the market, which makes the most sense. But this is where both of those markets are kind of heading back up to. That would be a decent little rollover and allow for a decent move for price to come back down. Now, as far as the NASDAQ dropping, the level that I pointed out in the S&P. This is the equivalent level in the NASDAQ. It actually held very well as that was the touch and go off of that little level and little area. I'm not going to repost that one because we came through it in the S&P though. All right, so those are some areas to look for in those two markets. Looking at crude oil. So in crude oil, we had a potential, this was a 15-minute level where we had an activation rule style of a trade because I just didn't love the way we were approaching that area. And if you look at how we did approach the area, we based there in front of it before getting into it. Now, the activation rule hits right here. And so your next candle is the big green candle out. So that activates the trade. Now, it does come to its opposing fair price value area. So, you know, that little move from 75.58 to 75.88, that's 30 ticks. Whether or not you're able to, if that's enough to kind of get where you want to be, and you're getting a little move out of it, and then it immediately came back down and blew right through that level. So for shorter term day traders, it probably turned out to be a pretty nice little short term trade. If you were holding on for a longer term, then you probably got the stop out, which is why, and I go back to this pretty regularly, which is why I don't talk about results of trades from the daily market commentary, because you guys are all going to have different styles. People ask me all the time, what are your results? Well, what are your results? My results are going to be based upon my risk tolerance. Everybody's results are going to be based upon their risk tolerance and their individual style. And so the best way for a trader to assess their results is based upon their style and their risk tolerance. Me personally, in this situation, I'm not as interested in the position because we base before we get down into it. However, getting into the trade would be a stop out loss for me because I would want price to come all the way back up to here, and it didn't get to that level. Some other traders may have been very comfortable on a very smaller time scale as soon as it moved up because of the basing before the level, taking their stop, moving it to break even. Everybody's going to have the style that works for them. So I always point that out because I think that's something important to consider. Now, looking with my crystal ball ahead into the future, however, I will use this area here. Now, mind you, we're still on the 15-minute chart as a potential reversal location. And the reason I'm going to use this level is because it's the origin of this move down right through here. We had a lot of basing before that drop, and I think that could work out pretty well. But I think you could get a breakout long from here to there. So if price comes back up above 75, I think you could go up to 75.48 before then you might see a reversal back down. Now that's easy to see on the 15-minute chart. On the hourly chart, that's what it would look like. So those are the areas that I'm looking at right now. We've almost come back to our last breakout long that we had in crude oil a couple of earlier last week. All right, so gold. So taking a look at gold real quickly. So gold did come up into our level and then moved down right away out of that zone to its target area. It only popped out of here by less than a tick, so more than likely it didn't get stopped out on that, but it did trade to the very, very end, and so we would be out of that trade as we speak. So now, you may get a decent opportunity for a breakout short below 1200. That 1200 is kind of whole round number support, if you will. So keep an eye on this, probably heading into next week. I'm not sure I'm going to hold anything over the weekend. Bonds. Bonds. Bonds had a really rough day over the last couple of days. Talked about it yesterday in our live trading room. Unfortunately, didn't get up high enough to enter into one of the positions. Got a little bit of rally there, but for the most part, bonds have continued their fall. Let's see if we get a little bit of a pop back up here soon in the bonds, and if we don't, then what's our next step is for price to continue to fall. As it stands now, though, we're kind of at a parabolic downward move in bonds. So yesterday it kind of chopped sideways for just a little bit after that strong move down. The Aussie, the breakout trade has happened, and it's moving along nicely. For those of you that trade the Aussie, that one is moving down. We had a little bit of a breakout. It came back up and retested, and now it's kind of continuing to make its next move to the downside. So the Aussie trade, for those of you that are still riding it, is running along well. Take your stop, adjust, and move it as need be. The euro, boy, is this frustrating. Look at how the euro came right up into the level and then boom, popped right through the level. But it's a dashed line trade, right? When I go down to a smaller time frame, you'll even see that we came into the level, came down, not quite out of it, and then broke it. So this means this should be a no trade. Now, even though it's gone down from this area, we miss it. This is a non-executed position based on the rules, because remember, in order to activate the trade, we got to trade halfway into the level, and then price has to come back down and break the level for the entry. Well, it did not do that, so this is a non-activated trade. So I got to pull this one off of the list. Remember, that's why we have those rules. They kind of help keep us sane. I was looking at this for the reversal, and actually it happened at this area up here. Still, our downward trend continues. We've got the strength of the dollar overall and in general. I think that we may even just kind of continue to roll over from here. So I am more apt to be short than I am long, and I would look, kind of at if we break below this area here, I guess you could rejoin that downward trend. Canadian dollar. So in the Canadian dollar, I've got a level that I've been waiting on for a while. And price finally made it down to the level that we've been waiting on the Canadian dollar, and now it's going, eh. Now, for those of you that have been in my trading rooms, I don't like a candle, once we come into the level, if it just bases for 5 or 6 candlesticks in a row, then that tells me that there's not a whole lot that's going to happen with this thing. Me personally, I'm a big fan of closing out for a small loss at this point. You even if it hasn't hit your stop yet, it's close to it maybe come close to your stop, but it probably didn't hit your stop yet. I'm okay closing this out for a small loss with price chopping around inside the base. That's a tiny loss, but it stands. Remember, the more we chop inside the base, what are we doing? We're eating away the buy orders that created this thing in the first place. So I'm going to remove this area here. And what we would look at now, let me go to the 4-hour. Technically I have a lower swing high and a lower swing low. So now I've technically got the ability to be a seller in this thing. And in my mind, the next natural stopping point doesn't come into play until down here. So catching a little bit of a rollover on that hourly chart, I think from here does lend itself for a pretty decent trade for price to roll all the way down into this region. Great British Pound, Japanese Yen. So in our Yen trade, we identified a little bit of a Yen reversal trade yesterday, and unfortunately it popped right through. Red line here indicated where we would place our stop loss above that pivot, and it did not get up above the pivot. So remember that, and this is actually, we spoke about this yesterday because we in the live trading room, what we did was we looked at the Japanese yen trade side by side with the currency pair, right? Because if this is really a little bit of a situation where you have 2 piles of supply, right? You got 2 separate piles of supply. And so this red line was, okay, place your stop above the pivot, which forces you to take a bit more risk. Well, if that risk that you take is beyond what you're allowed with one contract in the futures market, then what we talked about yesterday was, well, don't trade that. Trade the dollar yen. And if you trade the dollar yen, if I can type this morning, if you trade the dollar yen, then what you can do is you can take essentially the same trade, still have that same stop loss below the pivot, and allow it to move up. So now my point behind this is that even if you got into the trade, you're still right now at about a break-even point. There's a chance it can kind of continue to run, but you could enter into the trade using the currency pair instead of the futures contract. And by using the currency pair instead of the futures contract, what that means is I can use a micro lot, I can use a mini lot, I can use smaller position sizes if my zone width indicates that I need to be larger. So right now it's a small profit built into this one. I would be taking your stop, move it down, locking in some of those small profits, or maybe even just back to break even. Great British Pound, we unfortunately did not quite make it into the level that we had dictated as a potential reversal point. So now we're still kind of in between some really big areas and some really big levels. I'm going to add one right up here, which I don't think we'll test today, but I'd be interested to see if we test it over the weekend on Sunday when we open back up. All right, so that is our session for today. One of the things I want to make a real quick announcement. The week of October 21st to 26th, so October 21 to October 26th, we're gonna have a live trading room free preview. So if you're not a paid subscriber to TradersArmy.com, go to TradersArmy.com and sign up for the free subscription service, and you'll get the email that we're gonna do a free trading room week for those of you that are interested in seeing what we do in our live trading rooms, and it's going to be the week of October 21st to October 26th. So go to TradersArmy.com, sign up for the free subscription, and you'll get some emails that will tell you all about it. Thanks so much, everybody. I hope you have a great weekend, and I will see you on Sunday for the weekend edition. Later.